Good day traders, welcome to this week's technical market overview. Today is the start of week 2 of our trading competition, with some of our participants already showing a remarkable 20% return. You are welcome to follow the action in the link below. Also, for those who watched our video last week, you would have noticed that our technical market overview from last week turned out to be exceptionally accurate, and hopefully we would be able to say the same again next week. So please stay tuned. I'm going to let the disclaimer roll and I will see you back in the charts. Starting now by looking at the US dollar to South African rand. This double bottom scenario that I've been mentioning over the past 2 weeks has been playing out quite well, with our initial target at 1540 being reached on Friday. The next target is sitting at the neckline, that would be at around 1570, which is also where we find our monthly R2 pivot. Initial support currently to be found at the weekly pivot at 1521, and of course some additional support would be able to be found at the 15 Rand dollar level. Moving on now to the Euro USD. Along with this head and shoulders pattern that we have on the chart, last week we also pointed out this possible bearish flag, and then we saw that break and reach our short target at 1.194 on Friday. The trend now remains bearish, with the next short target, that of the head and shoulders, at 1.180. Strong resistance also remains in the vicinity of the head and shoulders neckline at 1.205. Just having a very brief look now at the economic calendar for the week, we can see that later today we have the Bank of England governor speaking at 12. Then on Wednesday we have the Royal Bank of Australian governor speaking also at 12. And then later that day we have CPI figures for the USD at 350. Some crude oil inventories and a 10-year bond auction. And then on Thursday we have monetary policy statements and the ECB press conference at 3:30. We are looking now at a GBPUSD. Last week saw price lose hold of the monthly pivot as well as that 4-hour 100 SMA, and then went on to test the 200 SMA, just briefly tagging our short target at 1.379. Currently, if the 4-hour 200 SMA manages to hold up and price can break back above that 4-hour 1 SMA, that could potentially see some more upside, taking out that or invalidating this possible head and shoulders pattern and seeing some upside somewhere in the vicinity of 1.412 to about 1.425. That is the weekly R2 pivot to the monthly R1 pivot. If, however, we lose the 4-hour 200 SMA, that could then set in motion this head and shoulders pattern with some initial short targets at 1.367, and that could be then followed by the monthly S1 pivot at 1.358, and of course there would be a bigger target should those levels be lost. Having a look now at the Australian dollar USD. Last week we mentioned that price action is expected to head back to that 0.775 to 0.780 range that was between the monthly pivot and last week's pivot. This turned out to be the case, with price action then getting rejected to close below the diagonal support. This bearish break could target the daily 100 SMA, which is in the vicinity of the monthly S1 at 0.751, and that could be followed by a full short target at 0.737, which is the weekly S3, and also the target for this head and shoulders that we can see on the chart. We are moving on now to the NASDAQ 100. Last week we mentioned that a break below 13,000 could see price head to support at 12,450, and as it turns out we ended up seeing exactly that, with what has now turned out to be a possible head and shoulders pattern in play. Price is currently testing the neckline at 12,700, with additional resistance currently between 13,000 and 13,160. That is the monthly pivot. The full head and shoulders target is all the way down at 11,500, with an interim target near the weekly S1 pivot at 12,140. Having a look now at the DAX, we did not see a lot in terms of any decisive price action last week outside of another test of resistance at 14,150. Currently, price is testing the daily 50 SMA along with that 4-hour 100 SMA, both which acts as important dynamic support and which, if lost, will see a deeper correction. There is additional support initially from the 4-hour 200 SMA at about 13,800. That will be followed by diagonal support near the monthly S1 at 13,500. And just looking at a break higher, there is some additional resistance at 14,000. Sorry, there is some bullish targets at 14,150. That is the weekly R2 to about 14,500, which is the monthly R2. Moving on now to gold, we are looking at it from the daily time frame. The bearish trend is continuing with the short target that we mentioned last week at 1,700 being realized on Thursday. And from a technical standpoint, the bearish trend is starting to near an area of very strong support in the vicinity of this monthly S1 at 1,675. We can see that it's an area where we have two major diagonal levels of support converging. Also, we can potentially see that if this falling wedge formation is something to be considered, any positive or any bullish break could see this pattern playing out towards resistance at 1,750. And of course, anything above that could then see us retest that upper diagonal channel at about 1,800. Now concluding this week's technical market overview by looking at Bitcoin. Once again, the 4-hour 200 SMA is proving to be strong dynamic support, and as long as price can remain above it, there is likely more upside. Initial bullish targets, should we take out this upper diagonal resistance or this upper diagonal level, would be in the vicinity of 53,880 to about 57,050. Whereas bearish targets, should we lose that 4-hour 200 SMA, it could be anywhere from 40,835 to 34,500. That concludes our technical market overview. We hope you enjoyed this week's video, and if you did, please remember to subscribe. Until next time, this is John Jacobs for RMD Trader. Remember, trade smart and trade successful.